Okay, so it's weekly webinar time. It's Monday. It's my outlook. It's what I think we're going to see coming this week. So excellent to see you all. So good to see you. Hello, Amy. Very nice to see you. And welcome to everybody. I hope you guys had a wonderful weekend. I hope everyone is all rested up and ready to attack the markets. We've got some good stuff. We have a smaller group today. So that is kind of not horrible. I kind of like where we can have a little bit of a more intimate setting and ask a few more questions. Maybe you guys won't feel so overwhelmed with asking questions, because I know sometimes when there's a lot of people it gets a little crazy. So welcome to everybody. Very, very welcome to you guys. Questions, comments, just let me know. I'm Jared Johnson, and it is time to look at some of the setups that I think are going to be great this week. Quick little update on a couple of things. Hey, Susan, great to see you. A couple updates on a few things. We've got a lot of news and a lot of crazy activity out this week. So you're not going to want to miss. This week is going to be a good week, although it's going to be cut a tiny little bit short, and I'll tell you why in just a moment. But we have a lot of news and a lot of big events happening this week. For anybody that would like to see how we trade some of this stuff, this is kind of the Outlook webinar. This is what I'm watching this week. This is what I think will be interesting. This is where I hope that we can make some money on these setups, and we do quite well on these setups most of the time. So hopefully you guys will as well, and you'll benefit from some of the analysis we're going to talk about here. But for those who would like a little bit more kind of day-to-day updates on really how these trades play out, how we manage them, and so on, you can go to daytradersfx.com, and all over the place, the website is getting a bit of a facelift on the very first page. But if you go to daytradersfx.com/join, or just go to daytradersfx.com, you'll see the join button, and you can get a 5-day free trial to our starter membership, which includes recordings of all of our live sessions every single day, and mobile trade alerts and website trade alerts, or you can get a trial to a subscription that will give you access to this live chat room every day, and we meet every day, a couple times a day usually. So we'd love to have you guys. And it's going to be an exciting week, so there's really a lot of stuff in the works, and I hope to see you all with us this week. It's going to be a very good one. So one of the reasons I say that this week's going to be cut short just a little tiny bit is that I have to fly out Thursday morning. You guys probably saw the email. Rob Booker's got a little traders conference thing going on this weekend, which should be pretty exciting. And that'll be Friday, Saturday, Sunday in Florida, and I am flying out there to talk about something. So I'll be presenting out there, and Mel, you're exactly right. This week is non-farm payroll, and there's a good chance I'm going to have to miss it completely, but I'll try to for members, just keep an eye on everything, and depending on how things go, depending on what the schedule is and so on, we may be able to swing a live non-farm session, but chances are we might not be able to. So I'll let you guys know as the week goes on, as I get a little better idea of the schedule and so on. But I'll be flying out to Florida to present at the conference, and hopefully meet a couple of traders and have a good time. So it should be a good time. But that is why Friday might be cut a little bit short. But as you can see, this week is going to be a major week. Now, again, for anybody that's here for the first time or even the second time, what we try to get a feel for is what are the important news announcements, and really specifically employment numbers, interest rate numbers for this week. And how can we kind of trade around those? How can we manage our positions around those, and so on? So, that being the case, we've got a lot of news. So even today, Australian employment numbers. Before that, Australia's got huge news today. So before that, in about the next 25 minutes or so, we'll probably be on the webinar when this happens. We have trade balance for Australia and building approvals, housing starts. That's in about a half hour, and then, or less than a half hour. And then a couple hours after that, we have interest rate announcements for Australia. Which, by the way, if they drop interest rates boom, that's going to be intense, and there's a possibility they might. It's always possible. And so the Australian dollar is going to be moving and scooting today. We've got a live pending order on the Aussie New Zealand for the group. We've been in and out of that thing just 20 times, and we've got another pending order, and we're going to talk about what we'll do with that. But that's coming up. And then going into Tuesday, we've got a little bit of Spanish and UK news. And then towards the afternoon, we start seeing New Zealand employment numbers. That's going to get the Aussie New Zealand cranking, so we'll be ready for that. Wednesday, we have ADP numbers for the U.S., services numbers for the U.K., and then we have retail sales for Australia. We have some pretty good news there. And then Thursday, we have interest rate news out of the Bank of England. That's always a possible shocker, so that'll be happening. We may end up doing a lot of stuff Thursday morning, like the UK news, as far as our news event for the group, since we may not be able to do stuff on Friday. So anyways, it's a lot of news, and then Friday we have Canadian and U.S. employment numbers. It's going to be a busy week. There's a lot going on this week, a lot going on this week. So be ready for that, and we'll just kind of attack that the best we can. So should be exciting. Interestingly enough, though, I am looking at a couple of different details, and let's go after it. I would like to talk about some huge regrets. Let's just go right to that. Let's get the bad stuff out of the way first. Huge regret number one. I talked about this quite a bit in the group, and then it just happened one day when I wasn't watching and didn't have a pending order, and I never really got back into it. We talked about the dollar Swiss franc. I've emailed, I've made videos about this, all kinds of things, saying if the dollar Swiss franc breaks the 23% fib, which is about 8,800, we should be long, because this is going to come back up because they're cutting interest rates, we're raising interest rates, so on and so on. This was a big shock movement on the dollar Swiss franc. It's going to come back. It's going to retrace probably 100%. Well, here it is 2 weeks later at about 50% of that huge move down. So my big regret is that I missed this whole move up. I wasn't trying to buy this bottom down here at 8,400. I was just trying to buy the break of 8,800, which was a fairly reasonable request, I thought, and then I just somehow completely missed it, and here it is from our entry area that I was trying to get. It's up 500 pips. So anyways, that stinks. I missed it. But there's nothing we can do about that. But I just need to get that off my chest. I feel a little bit better now. Thanks for listening. So we're going to keep an eye on these Swiss franc pairs. I think they're going to get kind of interesting. Everything, the dollar Swiss franc has retraced to about the 50% fib of this huge movement here. Pound Swiss franc is... Oh, there we go. There's my pound Swiss franc. Pound Swiss franc is right at about 50% of the movement as well. Pretty much exactly 50% of the movement. And a lot of Swiss franc pairs have just retraced 50%. 50%. I haven't looked at the Swiss franc yen, but I'm sure it's probably pretty close to the 50% mark. It's sitting right at 50%. So all of these pairs have retraced 50% of the move since the big Swiss franc crisis, crazy situation. So I don't know what I want to do with the Swiss franc pairs just yet. I'm watching them. Like I said, the initial entry that I wanted to get on both of these was the 23% fib on the pound Swiss franc as well, which was about 133.20 or so. Missed that. What do you do? But now everything's sitting at this 50% fib, and I'm just watching them. I just don't know what I want to do, but I'm pretty sure I want to do something. And I'm leaning towards, on like pound Swiss franc and dollar Swiss franc specifically, I'm leaning towards buying dips on these pairs, and that's kind of my initial plan right now. I don't really know where I'm going to buy that dip or where I'm going to exactly be getting in, but I'm pretty sure I want to buy dips on dollar Swiss franc and pound Swiss franc, specifically the dollar Swiss franc. So any moves down, into the below 90 or at 90 could even be kind of a good spot. We have some nice missed weekly and daily pivots down there at about 90.50 and 90.80 and so on and so on. Anyways, that's what I'm going to be watching for. Again, no super specifics on that one just yet, but I'd like to buy dips, and I'd like to see them pull back a couple hundred pips before I do that. In the process, we'll be watching for things such as rising wedges and anything that we can possibly trade the break back down before that dip happens, and make a few pips on the way down, and then hopefully be able to buy that dip and make some pips on the way back up. So it's looking pretty good. Like we could have a good opportunity there. Okay, so that's just kind of a general overview of Swiss franc pairs. Let me, because I have to kind of just clear my brain of all this, let's talk just a little bit about the euro dollar and what we're looking for here. I'm looking for the euro dollar to move higher before we start shorting. I mean, I don't know if anything is safe to say in trading. I mean, it was safe to say that we should have all been long dollar Swiss franc right before it dropped 1,300 pips. But, what do you do? So again, nothing is, so to speak, safe. We just try to do the best we can with the information we have at hand. But having said all that, my safe to say situation on the euro dollar is that this is going to head lower. The euro dollar is going to head lower. We're going to see 110 at the very least, and probably 105. There's just kind of no way that's avoidable, it seems, at this point. But what we do see here is a massive drop. We see a massive drop on euro dollar since about July or so. Excuse me, I guess it peaked out here at May, but the big drop started happening kind of July and then continued on through here. So we've seen some really big moves down on euro dollar, and I'm looking for the euro dollar to just retrace a little bit, give us some pullback so that we can sell the rallies. Now you can see that I've got a little channel here that covers about the last 2 months, and the euro dollar has been approaching that channel pretty nicely over the last couple of days. I think we have a decent chance of potentially breaking through this channel and starting to get above some of this consolidation, which is around 113, 65, 70. That's kind of the top of the last couple of several days, and that kind of puts us outside of the trend line in the channel, and that's not super far away. So I would be looking to. I'm going to be cautious about getting long euro dollar, but I'll be open to it and very, very possibly doing it very soon. Getting long somewhere above this 113, 60, 70 area, looking for a little move into that 114.50 or so, and then hopefully getting some moves up into 11500 and beyond. Here's the issue that we have right here. The euro dollar, fundamentally speaking, has to continue dropping. The euro, they're in the middle. They're starting their QE. The U.S. is tightening. Everything is pointing towards more movement down. Now, it's easy to say that the euro has dropped a bunch and that it's oversold and that it's time to. The euro is done dropping. And there's a lot of people that are saying the euro is done dropping. And I don't know if I agree with that. In fact, I don't agree with that at all. But I do think that the euro is ready for some retracement. Now, retracement only. I'm not looking for a new trend to start to the upside, but I am looking at the fact that the euro dollar has been pretty well overextended on this 4-hour chart, on the 1-hour chart, on the daily chart. It's just going crazy here, and so you can see that the euro on the daily chart, max pips have been 2,900, and it's already run about 1,700. That's pretty good. It's at 80%, 177 candles. Hasn't touched the 200 moving average in a very long time. On the daily chart, 4-hour chart, same kind of situation. We have previous max pips, they're about 742, and we're at about 541. If you don't know what the max pips are, I've done a little webinar and a couple of details. I'll post that link for you guys right after this. But this just basically means previous movements that we've measured over the last several years have run about 742 pips away from our reference point. And right now the euro dollar is about 540 pips away from our reference point. So it's getting into very extreme situations there. And that's on a medium-term chart. Short-term chart, like the 1-hour chart, has just run like crazy. The maximum pips from our previous point of reference over the last several years on the 1-hour chart has been 279. And here we are, 1,096. So euro dollar is ready for some pullback. There's no doubt about that. But I'm still holding on to the long-term trend to the downside, and I'm looking for 110. I'm looking for 105. I'm looking for parity. I think it's coming. But anyways, let's watch for the breaks. Let's watch for the breaks of the 200 moving average of this trend line of all of this, which is around 113, we'll say 70, 75 area. And we'll be watching that. I'm going to be very cautious about trading the break up of that, but I'm going to be very aggressive at getting back into the dip, selling the move higher. So we're going to be looking for that, and that should be super exciting. So anyways, that's euro dollar. It's going to be a great trade. We're going to watch for entries around 11500, maybe 11600, right around there. We'll see how it goes, and be ready to jump on it. If the euro dollar just is not going to retrace anymore, then we probably want to be short below 11300. So it's kind of in a tight little area. It hasn't done anything for several days. So basically above about 113.70, 75, we want to be long cautiously, and below about 11300, which is not very far away, we want to be short cautiously. So we're kind of in a good situation on this euro dollar, and we just have to wait it out a little bit and see where this thing goes. Because the pound dollar can be very similar to the euro dollar at times, we're keeping an eye on this, but the pound dollar isn't giving me a whole lot, so I'm just waiting for a little bit of clarity on that pound dollar. So we're kind of in a little bit of a holding pattern. We want to see where this thing goes and what it does, and I'm waiting for that, and, looking to see where that goes. Quick little word on Aussie New Zealand. Still waiting to buy the dip. Now, for those that aren't in the trade group, we have been in this trade several times, and we keep locking in profit, and the choppiness takes us out with profit, and we've just had trade after trade after trade, and we're going to get into it again. For members, all the trade specific details are posted in the members area. But the Aussie New Zealand, I still like buying the dips. But I'm still very cautious and very aware that we could get a slightly bigger breakdown, and I'm totally ready for that. And we've got a tight stop on our buy the dip on the Aussie New Zealand. We have a pretty tight stop on there. And as this is kind of buying the dip and hanging out and doing all of that, we're going to watch this, and we're going to be cautious with it. And there may be an opportunity to even sell the break. If you remember of the news we have this week, we have Australian. Let's see, we have Australian interest rate news, which is going to be a big deal here, especially if they potentially lower rates, which is a definite possibility. That could shoot this Aussie New Zealand dollar down like crazy. We have New Zealand employment numbers, which is a big deal as well, and that's going to get this thing moving all over the place. So the one thing we want to be a little bit careful of is not being not coming into these news announcements head on with an open order. We want to just see where the market takes it, and then let's get an order going. Especially with these interest rate announcements, they go so crazy, and they're just so crazy, and they can just do so much. Yeah, Bill, you're exactly right. We have Australian interest rate numbers tonight, so we're going to see where that goes. We'll see what happens with the Australian dollar, but I like this one a lot. I think there's a very good opportunity we could get all the way back down to 10400 area. That's a total possibility, and I'm totally ready for that to possibly happen. And at that case, I would be buying the heck out of the Aussie New Zealand down at those lows. But we need to see how the news comes out and kind of what happens. Last week we had interest rate news for New Zealand, and they said they did not change rates, but they said the exchange rate is still too high and still more than they want. They're trying to get as much mileage as they can out of talking about it before having to do something, because when you have to intervene on a currency, it could be tens of billions of dollars per month for these central banks. The Swiss National Bank was paying $100 billion a month. They were buying $100 billion a month worth of bonds and treasuries to manipulate their currency, and they finally just said enough. This is too expensive, and they let it go, and the Swiss franc went nuts. And so all central banks will try to get as much out of just talking about it as they can before they finally have to put money into it. And so if, for example, Australia cuts rates tonight with New Zealand not cutting rates yet, that's going to put a bit of a bearish tone, and we may end up with an opportunity to sell the break on the Aussie New Zealand. Which, again, if we did have that happen, I would potentially be looking for entries to short this, just kind of below the consolidation. We have like 106.50 area that would be good to possibly start getting short on Aussie New Zealand. So below 160 or 106.50 could be a good spot to start shorting this pair and taking it down if that news is bearish for the Australian dollar. But it is still going to be a nice trade and a big move, and I'm still looking forward to riding this thing hopefully back up again, unless this is trying to turn into a massive monthly head and shoulders pattern, in which case it moves down 1,800,000 million pips, which is possible. But we'll leave our pending order where it is for the moment. And for members, I will post a pending order on this for the coming news tonight. So anyways, that's the Aussie New Zealand. We still want to buy dips, but we could possibly see a break and a move down. Okay, we've talked about so many of those. We've mentioned the Swiss franc. We've talked about the euro and the pound, the Aussie New Zealand. Here's two pairs that I think are kind of sleepers, and I think they're going to be interesting. Not much is going on in the way of central bank stuff too surprising out of Japan. It's all kind of been holding steady for the moment. So here's two levels that I'm watching very closely. On the dollar yen, my decision point area is about 115.50. And that's kind of the area I'm watching. If you look at dollar yen, you can see that over the last couple of weeks it's been a choppy disaster. Look at that. That's horrible and also awful. Yes, Ralph. Yeah, I'll sure have a look at that. Absolutely. And so it's been just tons of chop the last couple of weeks on the dollar yen. So I don't want to do anything unless this comes down and pivots at 115.50 and gives us a nice reversal candle and a triple bottom or double bottom pattern. Then I'll jump into that and I'll buy off that dip. Otherwise, I'm looking for a break of 115.50 down into at least 114.50 and even potentially further down. We have a fairly overextended chart here. The daily is not getting it's not reaching kind of extreme levels yet, but it's getting pretty close. 152 candles, 44% probability. We're about half of the max pips. That's far enough for this thing to kind of give us a little bit of a move down. If this moves down, I'm looking for a opportunity to sell the break of 115.50. You can see it's about 117.50 almost, so that's a little bit of a move down to get there. And I don't want to do anything in the middle of this because this is just choppy disaster. So if it gets through 115.50, I'm shorting this to at least 114.50. And with a little tiny bit of a stretch, we can get to about 113.70, which happens to be our 38% fib. So from this move right here, this recent nice strong run up of the last couple of months on the dollar yen, we have now crossed the 23% fib a couple of times, and it continues to pull back. We have a big pull of this to take us down into 113.70 area. That is pulling on the market. We know that these fib 23 to 38% fib levels work over and over and over and over and over again. So let's watch it and let's be ready for it. I'm just personally going to wait a little while. I don't want to get in the middle of the chop. I want to get in at the break of 115.50, and I'll trade it down for a minimum 100 pip move, if not a good little bit more. It could have a pretty easy 200 pips in it. So dollar yen's going to be interesting for that. And Adrian, I agree with you a whole bunch. We could get this all the way down to the 50% fib, the 200 moving average, this cluster of missed pivots, which is around 111.50 area. That would be a stretch. That would definitely be a big move, but it's absolutely possible. And down there, we should absolutely buy the heck out of it and really just put some big positions on and ride this thing right back on up into 120 and beyond. So there's a lot of potential pips in this in this move down and in a potential move right back up. So that's what I'm looking for. So the big level to watch is 115.50 on dollar yen. 115.50 dollar yen. Really excited about that one. Pound yen. I'm watching about 175.80. And I'm looking at this pound yen and I'm thinking to myself, pound yen, what are you doing here? If we look at kind of the big, massive run-up right here, where we kind of see some small amounts of retracement, this is kind of one of the bigger pullbacks that we've seen on this whole run-up. In fact, it's a pretty good-sized pullback of about 1,300 pips. You can see that it does retrace, but it's definitely retraced quite a bit further than it has on any of these pullbacks already. So if the pound-yen continues its pullback, continues its retracement, I'm watching very closely the break of this 175.80. Well, there you go, Adrian. Okay, so you're right on the same page as me with this one. That's great. That's excellent. And I think this is going to be a really, really good move. We had a big double bottom right here at 175.80. And it just looks like this thing could really be ready to make a bit of a move down and really give us some big retracement. The 23% fib is down here at about right around 170,300. So there's potentially 300 or so pips of movement in this. So this pound yen could be a really, really good one below 175.80. So let's watch it. If for some reason this spikes down and really kind of holds that low and gives us a big reversal candle on one of these larger time frames, let's trade it back up. We could get it moving up from there, and we do have to watch the news and see kind of where the UK is standing with a couple of different things to give us a more clear idea. But that's the direction that I'm heading with this pound yen. So dollar yen and pound yen are going to be two big ones that I'm going to be keeping an eye on for sure. And just to kind of address Ralph's question on the CAD yen, this thing is looking pretty interesting as well. It's retraced all the way back to the the weekly 200 moving average. And I'm going to keep an eye on this. We've got 4-hour and 1-hour charts that are starting to get a little bit of movement here. And so we're going to kind of see how these how this one plays out. You can see that the 1-hour chart is looking pretty good on the numbers, and the 4-hour chart is as well. And there's lots of missed pivots and lots of great levels up here for this CAD yen to run up into. So this one will be on the radar for this coming week as well. So I'm going to focus on those. As more news comes out, we'll talk about pairs such as Pound New Zealand and Euro Aussie and some of those others because those can move pretty well with big news. But for the moment, big focus on Euro Dollar, big focus on Aussie New Zealand, big focus on dollar yen, and big focus on pound yen. Those are going to be some really, 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 really great movers. And we're going to watch and kind of cautiously keep an eye on the Swiss franc pairs, which are all sitting at 50% fib. 50 cent. I think I've got wrap on the brain. Sitting at 50% fib levels and should be pretty interesting coming up. So we have some great setups coming this week. I'll send out an email for members regarding our live news trading event that we'll have this week, and I'll also post some levels for members for the Aussie New Zealand with the coming news as well. Michael, the dollar peso. Let me see where. Let me have a little look at this. At this dollar peso and see where. Where? There you are. I haven't looked at the dollar peso in a little while, but it's a pretty great mover, and it gets some pretty nice setups. Yeah, I can see where your interest would be coming from on this one. Tex-Mex, that's for sure. So there's some interesting stuff on this dollar peso for sure. This will be one to keep an eye on. We have some really great setups this week. I'm super excited about everything that I've just mentioned, and I think we're going to make some super great bucks this week as well. So let's be ready for that. 100% tacos tonight. Absolutely. Yes, indeed. Yeah, this is sitting at 100% on the daily chart. That's a big deal. That is a big deal. So we're going to keep an eye on this. Let me get this recording posted, and I'll take a couple of questions and comments. Thanks for attending, everyone. And let me address a few questions right now.